Now the European Central Bank is out with its latest interest rate decision. Steve Liesman joins us with the news. What is it, Steve?
Yeah, 50 basis points as expected to 2% for its main, to 2.5% for its main refinancing rate. It also did the marginal lending facility, all the other ones. Just looking at the headlines here, Joe. Says keeping interest rates at a restricted level will over time reduce inflation by dampening demand. Pretty much as expected here. Where the main refinancing rate is at 2.5%. They're one of a series of banks that raised interest rates, including the Bank of England this morning went up by 50, and of course the Fed yesterday by 50. We also had, let me take a look, Norway and the Swiss also up by 50 basis points. Joe, I don't think this is any big surprise. The terminal rate for the ECB had been priced at 2.90. I can't get a look at what it is now, but basically the idea is they're not going to go as far as the Fed already has gone, or as far as the Fed now plans to go with, or at least forecast that it's going to go with that over 5% funds rate for 2023 that we got yesterday. Guys?
Different, yep. Not only do the multi-speed economies with us, Steve, but with all the different members in their own, on the continent. It's a crazy way to try to do things, but you know, at least we'll have some dry powder around the world at some point. Steve, remember how long that was a big complaint? If something happens, we're at zero, what are we going to do? So, I mean, I'm trying to look at the bright side of it. We are definitely in a period where we haven't been used to it for quite a while. So let's get it out of the way, I guess. But
it's a positive way to think about it, Joe. It's a very positive way. Has the dollar
turned, Steve? If they keep, I mean, they're still behind us. And they're, you know, we've expressed concerns here about a strong dollar.
Let me give you. I'll give you the DXY. I don't know if they got the DXY in the back. I got to look it up here. I have the DXY at 104. I guess it was as high as what, 110, 112 at some point. It was super strong when it looked like our main trading partners were not going to be on board with raising rates here. But that's another feature of this, Joe. It's sort of every central bank, every economy for itself. I have here a peak back in September, Joe, of like 114 on the DXY, which is the conglomeration of the blend of different currencies that are out there versus the dollar. And look, Joe, I've never been a big fan of following the dollar as a big economic indicator because the U.S. economy is so dynamic that you have some people benefit and some people not benefiting. I think we ultimately benefit from a stronger dollar because we import so much stuff. And I'm interested, just a real quick, Joe, 8:30, make sure you take a look at those retail sales. We'll get a beat on at least the initial month of spending for Christmas. I know you guys were talking about Christmas spending and the top and the hot 10 items. It's very important.
Nehru jackets.
Make sure that you take a look at that. We'll see what people are doing with their money, at least in November.